story further, Stefan Koopman, Chief Macro Strategist, Rabo Bank, is with us on the show. I'm speaking with Geoff, independent emerging markets commentator, and Meera, Shankar, former ambassador to US and Germany. Welcome to all of you, and thank you so much for speaking with us today on the show. Ambassador Shankar, let me begin with your take on what has happened in the UK and with Liz Truss. Lord Meghnad Desai was very clear, actually. He pulled no punches. He said that Liz Truss lacked maturity. She's plunged her country into a crisis, both economic and political. Can this one rollback fix the situation for her?
I think Liz Truss has taken a very ideological view of economic policy without reference to the prevailing economic situation, where there was already high inflation, where there was already high debt because of the support that was given during the COVID pandemic to businesses and restaurants and the service sector. And it's just a kind of a formula. If we have tax cuts, then eventually this is going to lead to a virtuous cycle of investment and growth. But in a situation where this is unfunded, you are cutting taxes, so reducing finances at the same time that you are increasing the deficit and borrowing without actually saying how that is going to be funded. I think, the phrase was voodoo economics, or what Meghnad Desai called fantasy economics. I think that really has been the problem with a very ideological approach, that it needs to be, contextualized with reference to the prevailing situation, rather than taking this kind of an overall, ideological view. Liz Truss has had to roll back one of the elements of a mini budget, but there are demands that others should also perhaps be moderated or roll back. For instance, one of the conservative mayors has asked for the rollback of the removal of the cap on the bonuses that bankers and financial executives enjoy, because this cap was put in place after the 2008 crisis,
right,
to actually deter risk-taking behavior, which had led to that kind of crisis.
Sure.
Now that Britain is out of the EU, they felt that they could do away with this. But there are demands that maybe this the cap should be reinstated. And of course, they have to look at the whole package, because still, I think about 43 billion pounds are unfunded. So is that going to come from cutting benefits at a time when people are already feeling the pinch, and the increase in interest rates, the drop in value of the pound caused by these decisions is leading to higher outgo in terms
That's actually an interesting point. Let me take that to Stefan Koopman. Is this one portion of that mini budget being rolled back going to be enough to restore credibility in the UK economy and in the Liz Truss government?
Well, I don't think it is enough, but it really is a first step in the right direction. But if you look at the market reaction today, if you look at the value of sterling, it's up around 0.5%. Gilt yields have dropped 10 to 20 basis points across the entire interest curve. We've seen some speculation of very aggressive and also earlier and soon Bank of England tightening. We see that speculation easing a little bit. So these are quite some big moves that we have seen this morning in response to the announcement of Truss and Kwarteng. But yes, as I wanted to repeat, it is only a first step in the right direction, because the broader issue is that this government will have to convince investors that they are serious about money, and that it knows that it will have to find a way to finance what it spends, and that it is very serious in getting inflation back under control. And yeah, so far we haven't seen a lot of those kind of signals. So I'm expecting to get. I'm expecting more of this in the upcoming weeks. Yes.
So when they say that we have heard you, this is just the beginning of that. And could there be more rollbacks? Geoff, Dennis, will Liz Truss have to go back with her team to the drawing board?
Oh, yes, I think so. I've been involved in the debate recently because of myself being an emerging markets person, people saying, is this a sort of irresponsible set of policies as we've seen in emerging markets over the years? And I said right from the word go that Larry Summers had it right. This is an utterly irresponsible mini budget. And I think, in fact, that my own personal view would be more hawkish than perhaps Stefan, in that I think that this rollback of the higher rate of income tax is welcome, but it's only a drop in the bucket. And frankly, we still have an enormous fiscal expansion here. And it's going to, I think, arguably over time, continue to put markets under pressure. Obviously, what we've seen here with the rally in sterling and the drop in bond yields, although they're only halfway back to where they were before the mini budget, is all very welcome. But this is a crazily broad fiscal expansion, in my view, which I think is so unsoundly based in terms of economics that more will have to be done to rein in fiscal policy. I think it's as simple as that. And one question I have, which I think is starting to be answered maybe, is where are the ratings agencies? Why are they downgrading UK debt? I mean, if this was an emerging market situation, they would have downgraded the UK a moment after the mini budget. So this is poor fiscal policy, ignorant fiscal policy, in my view, which is actually not going to work. And I think it will force the Bank of England to raise interest rates going forward, possibly quite significantly. And I think it puts the UK market still under pressure medium term. And it's not exactly like an emerging market crisis, because most of the crises in emerging markets occurred when currencies were fixed, and then those fixed bands blew up when pressure built. Sterling is able to move up and down, which is obviously beneficial. Also, the UK government is the UK financial system is very deep, very broad, big institutional base, etc. So I think there are very many differences with emerging markets, but this is a big own goal, in my opinion, on fiscal policy in the UK. We've not heard the end of this story.
Just to follow up for you, Geoff, you're saying it's a big own goal. We haven't heard the end of the story, but it sort of seems counterintuitive. If you think of it, Liz Truss is one of those rare politicians who's done what she promised. She promised she would do this. She's actually done it. And if you hear what Lord Meghnad Desai said, he said that nobody expected her to follow through. Why do you think that she'll have to change her entire outlook, and can she really do that without losing credibility?
She can't without losing credibility, but I think investors really didn't have any sense of the total magnitude of the fiscal package. And here, I'm more distant now, and so I defer to Stefan on things like that. But it seems to me just to plow forward with a wildly expansionary budget with no sign of government spending cuts, no sign of how you're going to finance it, and just assume the markets will take it because it's going to help growth down the road, it's just wildly optimistic. And this is trickle-down economics in the most extreme form, and I think the markets are voting against it. So there's a lack of, if I excuse the pun, there's a lack of trust in Liz Truss now. And I wouldn't be the least bit surprised if the Chancellor loses his job still. I wouldn't speculate about the government itself, but for me, this is a very large fiscal deficit we're seeing here, whether or not she promised these moves. And I think it's going to put pressure on the UK financial markets for a while still to come.
Not over. Stefan, your take on what other portions of the mini budget we can see rolled back, and how much further will they have to go?
Yeah, I do agree fully with Geoffrey that this is a known goal in one of the most glorious forms, actually. But I think the focus will be more on spending cuts, to be honest. That's the other way to balance the book and to make sure that debt to GDP stabilizes in the long run. And there is some risk, I think, of some very serious spending cuts either. And yeah, there are basically three different ways to do that. They can either decide to freeze social spending. Don't let social payments rise with inflation. So the real value of these welfare payments declines with a rate of around 10% a year at the current inflation rate. So this is potentially a very big saving, could earn them to the tune of £6 to £8 billion by my calculations. But of course, it's very unpopular with the voters, especially those in the northern part of England, which they've just won in the 2019 election. The other option is to cut spending on departments, so funding on the police, on the NHS, on defense, on education. And that would be a kind of a repeat of the period of austerity that was implemented by Prime Minister Cameron and his Finance Minister Osborne. But again, this is very unpopular as well. And I think it would really starve the economy of its resources. And the third option, and I think that will be the most likely option, is if the government eventually decides to cut spending on investments. If you look at the current plans, there are some big increases planned for spending on infrastructure, on the energy transition, digitalization, on the UK's inner cities. And it is very tempting to make some very big cuts here, but it wouldn't be smart policy, as it is exactly this type of spending that the economy badly needs, and that could hurt potential growth or trend growth or structural growth. Economists have all kinds of terms for that, but it would hurt a long-run economic growth for the UK. But it is a very tempting thing to do because they can deal with the consequences with it at a much later point in time, and maybe even a future Labour government has to deal with those consequences.
You know, Ambassador Shankar, the reason why we have been also tracking the story very closely, of course, it's a huge international story, because it's also one example of how a nation is dealing with a situation that is global. Most countries around the world are facing some kind of economic pressure. Here in India, in fact, there is this whole conversation about economic freebies and, you know, how to really push growth at a time like this. What are the lessons from the Trust Saga? Ambassador Shankar, the question's for Meera Shankar. Yes.
Sorry.
Well, the lessons from the Trust Saga are that, you know, you cannot abandon prudent fiscal policy in your pursuit of growth, that it can have a kind of a negative impact on the very process of that growth that you are trying to revive. And that we are all at this stage faced with enormous challenges because of the COVID pandemic, because of the Ukraine war and its impact on energy prices, food prices worldwide. And the world is going to have to grapple with this for some time to come. India has been in a relatively better position, but we also face pressures on the balance of payments front because of the increase in the energy bill and you know, our exports not growing so much. So I think we also have our own challenges. Our own food inflation has been high. And these are things which the world has to grapple with for the next few years, I think.
Thank you so much to all of you for joining us on the lead story this evening on the India Development Debate. We'll be following this Liz Truss saga quite closely on the show.